You ever have that experience where you're talking with a potential new client, you discussed what it is that they are looking at, and as soon as you give them a quote, they immediately say yes. This is Lauren Fogelman with Business Success Solution. And when you first hear that yes, it sounds great. You just engaged a new client into your firm. It feels like you nailed the conversation, right? But there's some things happening behind the scenes that I think you ought to be aware of, and they are critical. And I want to share how this topic came about because I was recently talking with Lisa, and Lisa is an accounting firm owner. She reached out to me recently because tax season is starting to ramp up again. And last tax season, she's had 127 clients. And as you know, calendar was packed. Everything was really busy. She was working very hard. But what she noticed after tax season, which caused her to reach out to me, was that her take-home pay was less than half what she had been making with as many clients about 3 years ago. So that didn't really add up to her. Why was it that she was working just as hard, maybe even a little bit harder, but she was bringing home less revenues anyway? So she needed to figure out what was going on and couldn't quite put a finger on it. But I want to let you know during our conversation, I always ask, how many potential clients are you speaking with before somebody says yes to you? And she was telling me, Lauren, everyone says yes right away. And that's when I mentioned to her, well, what if that instant yes that you're getting isn't actually a win or something to be seen as a positive result? And this is why this matters to your firm. There's some warning signs or signals that your firm's prices are too low. And the very first one, top of the list, is that immediate yes, that immediate acceptance, when clients aren't even thinking about whether to engage your firm services or not as soon as you share your fees. And that's where you might realize that you even have competitors, people that you see offering a similar service, and they are probably charging twice as to what you are. And something to think about is if you look at the quality clients who are paying twice the rate for the similar service as what you are, a lot of times it's because those higher quality clients don't feel that your rates are reflective of the expertise or the experience that they're looking for. So quality clients sometimes move over or move on to somebody else that's charging higher fees because your low rates signal to them that they might not get the information, you don't have the expertise, or it might be too transactional working with you. Even if you're a highly client-centered firm, your rates say something, there's a hidden message about that. So that's number one, is that immediate acceptance says something about your rates. The next thing is volume without profit. Do you know what I'm talking about? Well, that's where your revenues look really, really good on paper, but your profit margins get smaller and smaller and smaller because they're not keeping up with inflation, or you get faster and you're not getting compensated for the increased efficiencies. So as a result of that, you find yourself working more hours, but there's less to show for it. Okay, the third thing is what I call the quality shift. This is where the clients that you are engaging, the ones that are saying that quick yes, they aren't quick responders. You have to chase after them. They don't quickly give you the information you need in order for you to maintain your workflow. So there's a lot of disruptions or not hearing anything from them. You can't nail them down whatsoever. They're like moving targets. And they might be viewing you as an alternative to budget solutions or budget services out there. Plus, your expertise, it's not even a part of their decision. That's not what they're looking for with you. They just want the compliance side good enough because they have to get their taxes filed at the end of the year. So those are three signs that maybe your rates are being a lot too low and we need to correct that. Is you get that immediate yes, feels good immediately, but down the road, it means that you have a lot of clients and you're not getting well compensated for that. Number two is, once again, volume without profit. You're now working towards being more of that factory style firm. It's going to be more transactional because you have a lot of clients that you're working with. And the third thing is the quality shift. The people who are engaging your services are saying yes to your low rates, not to your level of expertise. So this is something to actually think about. When you price your services properly, there's actually a natural pause from someone considering working with you. There's a moment where they consider the investment. So it's not going to be an immediate knee-jerk yes. They have to think about it. And the way to be able to kind of compare this is, look at the last time that you made a significant purchase. You probably didn't say yes immediately. It's something that you had to consider the value before you were ready to make the investment. And that's what you want your clients to do, is you want them to just kind of like soak in the investment and to consider it before they go ahead and say yes. And when that happens, this is what it looks like. When I want to go back to Lisa, we started reviewing her client list, and she was able to get some insights about who valued her expertise and wanted more advisory services from her. It wasn't just how quickly she could do the work for them so that they could get a low invoice. So we really looked at her client list and reviewed it. Then we went ahead and we structured packages. And the packages were a first step to start separating her fees from time. She no longer needed to charge for her time by offering the packages. We were able to make the transition of value pricing. As a result of her making these changes, within about 90 days or so, she actually reduced her client list by about 18%. So there was attrition, especially the ones that were the most price sensitive, and some of the headaches that she secretly wished would go away anyway. But not only did she reduce her client list by 18%, she increased her monthly revenue by $5,000. Something to think about. Less clients, but her revenue bumped up significantly. And here's why this matters, is because she's now working with a better quality client. They respect her, they value her expertise, and she doesn't need as many clients to meet her revenue needs. You deserve those same results in your firm. So if you're ready to stop leaving money on the table and you want to really engage those quality clients who value your expertise, then let's have a conversation about how this would look for your firm. Let's go ahead and get started with a strategy session. You can go to businesssuccesssolution.com/let's talk. And during that conversation, this dedicated conversation, we're going to look at your current pricing strategy, where you're leaving money on the table, and how to start to put in the steps to attract a higher quality client and increase your firm's revenues. So don't let another month go by wondering if you're undercharging. Reach out. Let me know you want to have a conversation because you're ready to charge fees that reflect the value of the services that you deliver. This is Lauren Fogelman at Business Success Solution, showing accounting firm owners how to double their income working half the time.